Rise of Bitcoin, from obscurity to global currency. Imagine a world where the power of money lies not in the hands of governments or banks, but in the code of a decentralized network open to anyone with an internet connection. In 2009, Bitcoin was dismissed as a fringe idea, a geeky experiment destined to fail. Fast forward to today, and Bitcoin stands at the center of a financial revolution, challenging the very foundations of the global economic system, from underground internet forums to Wall Street boardrooms. Bitcoin's journey from obscurity to a trillion-dollar asset has been nothing short of extraordinary. How did it all begin? It was 2008, in the depths of a global financial crisis, when an unknown figure hidden behind the alias Satoshi Nakamoto sent out an email to a cryptography mailing list. The message contained a simple proposal, a peer-to-peer digital currency system that didn't require banks. At the time, no one could have predicted that this modest idea would grow into a global phenomenon. But the release of Bitcoin's white paper marked the birth of a new era, one where people could take control of their own financial future. The journey of Bitcoin is not just a technological breakthrough. It's a human story of belief, resilience, and disruption. The birth of Bitcoin, a response to crisis. Bitcoin emerged from the ashes of the 2008 financial crisis, a time when the global economy was on the brink of collapse. Major financial institutions, once deemed too big to fail, crumbled under the weight of their own risky practices, leading to a widespread public outrage and distrust. In this chaotic environment, the idea of a decentralized currency took root. Satoshi Nakamoto, the enigmatic creator of Bitcoin, recognized the need for an alternative monetary system, one that would not be subject to the whims of central banks. And the Bitcoin white paper, published in October 2008, proposed a revolutionary idea, a peer-to-peer electronic cash system that could function without a central authority. This was not just technological innovation, it was a manifesto for financial freedom. The underlying technology, blockchain, was a game changer. By allowing transactions to be verified and recorded on a public ledger maintained by a network of computers, Bitcoin eliminated the need for centralized nature meant that transactions could be conducted directly between users, increasing efficiency and reducing costs. Moreover, the blockchain's immutability ensured that once a transaction was recorded, it could not be altered or deleted, addressing a significant vulnerability in traditional digital currencies. The Genesis block, mined by Nakamoto in January 2009, contained a hidden message referencing a headline about bank bailouts. This served as a powerful symbol of Bitcoin's purpose: to provide a financial system that empowered individuals and operated independently of traditional banking structures. In its early days, Bitcoin attracted a niche community of enthusiasts and technologists who shared a vision of financial sovereignty. While skeptics dismissed it as a passing fad, believers saw potential for disruption. As Bitcoin gained traction, it began to attract attention not only from tech-savvy individuals, but also from the mainstream media, setting the stage for its eventual rise to prominence. Early days, nurturing an underground movement. In its infancy, Bitcoin was predominantly the realm of cryptography enthusiasts and idealists. The currency was born in a digital underground primarily discussed on niche forums and communities dedicated to cryptography and technology. In these early days, Bitcoin was not viewed as a serious currency, but rather as an experiment in decentralized finance. The first real-world transaction using Bitcoin occurred in May of 2010, when programmer Laszlo Hanyecz famously paid 10,000 Bitcoins for 2 pizzas, an event now commemorated as Bitcoin Pizza Day. At the time, the transaction was seen as a quirky moment in Bitcoin's history. Few could have imagined that those 10,000 Bitcoins would be worth millions just a decade later. This early usage underscored the challenges Bitcoin faced in gaining acceptance as a legitimate currency. As Bitcoin's visibility increased, it attracted a diverse array of users. Some were motivated by the technology itself, while others were drawn to the potential for profit. However, Bitcoin also gained notoriety for its association with the dark web. The Silk Road, an online marketplace for illegal goods and services, became one of the most high-profile uses of Bitcoin, casting a shadow over its reputation. Media outlets frequently highlighted Bitcoin's ties to illicit activities, fueling skepticism and regulatory concerns. Despite these challenges, the underground movement fostered a sense of community and a shared purpose among Bitcoin advocates. Forums like Bitcoin Talk became hubs for discussion and collaboration, where users shared tips on mining, trading, and securing their digital wallets. This camaraderie played a crucial role in Bitcoin's early growth. As enthusiasts spread the word about its potential, as awareness grew, so did the number of people willing to experiment with this new form of currency, setting the stage for future adoption. The first boom, Bitcoin, gains momentum. The year 2013 marked a pivotal moment in Bitcoin's journey as it transitioned from a niche currency to a mainstream phenomenon. The price of Bitcoin began the year at about $13, but soared to over $1,000 by December, driven by a combination of factors, interest and speculation. This surge was not just about price. It represented a growing recognition of Bitcoin's potential. Several key events contributed to this explosive growth. The first was the increasing media coverage, which painted it as a revolutionary technology capable of disrupting traditional financial systems. As stories of individuals making substantial profits circulated, more people began to take notice. Social media platforms amplified the buzz, leading to an influx of new users eager to invest in Bitcoin. The emergence of Bitcoin exchanges also played a crucial role in its ascent. Platforms like Mt. Gox provided a user-friendly way for individuals to buy and sell, lowering the barrier to entry. However, this newfound accessibility came with risks. Mt. Gox itself would later face security breaches and collapse, serving a harsh reminder of the volatility and dangers associated with Bitcoin investment. Simultaneously, Bitcoin gained traction in various communities. Merchants began accepting Bitcoin as payment method, while companies like Overstock.com became pioneers in the e-commerce space by allowing customers to pay with Bitcoin. This shift demonstrated that Bitcoin could function as a legitimate medium of exchange, expanding its use beyond speculative investment. However, with rising popularity came increased scrutiny. Critics labeled Bitcoin as a bubble, pointing to its extreme volatility and potential for speculative mania. This skepticism was compounded by concerns over its association with illegal activities. Despite these challenges, the momentum continued, and Bitcoin's image as digital gold began to take hold, setting the stage for its future as a store of value and alternative currency. The rise of altcoins and blockchain adoption. Bitcoin's popularity surged. It ignited a wave of innovation within cryptocurrency space, leading to the creation of numerous altcoins, alternative cryptocurrencies that sought to build upon or address Bitcoin's limitations. Ethereum, launched in 2015, emerged as one of the most notable altcoins, introducing the concept of smart contracts. These self-executing contracts with the terms of agreement directly written into code allowed developers to create decentralized applications, DApps, on the Ethereum blockchain, broadening the scope of blockchain technology beyond mere currency. This diversification of cryptocurrency landscape demonstrated that Bitcoin was just the beginning of a broader movement to decentralized finance. New projects aimed to solve issues such as scalability, transaction speed, and energy efficiency. For instance, Ripple focused on enabling faster cross-border payments, while Cardano and Polkadot introduced innovative consensus mechanisms to enhance security and speed. As altcoins flourished, blockchain technology gained traction across various sectors, leading to increased experimentation and adoption. Industries such as supply chain management, healthcare, and finance began to explore the potential of blockchain to enhance transparency and efficiency. Major companies recognized that the decentralized nature of blockchain could address inefficiencies and improve trust among stakeholders. Governments also took notice, with many exploring the potential of blockchain for applications such as digital identity verification and land registries. The rise of central bank digital currencies, CBDCs, became a hot topic, as countries like China and Sweden initiated pilot programs to investigate the feasibility of issuing their own digital currencies. Despite the excitement surrounding altcoins and blockchain adoption, Bitcoin remained the leading cryptocurrency, often referred to as digital gold. Its pioneering role, large market cap, and brand recognition established it as a cornerstone of the cryptocurrency ecosystem, proving that while innovation was thriving, Bitcoin was still a central player in the financial revolution. With its meteoric rise, Bitcoin faced mounting challenges and regulatory scrutiny that threatened its status as a legitimate financial asset. As the cryptocurrency gained mainstream attention, concerns over its use in illegal activities, such as money laundering and tax evasion, prompted governments to take a closer look at how to regulate this new form of money. In 2017, several governments imposed restrictions on Bitcoin trading at initial coin offerings, ICOs, leading to significant market volatility. The Chinese government's crackdown on cryptocurrency exchanges and ICOs sent shockwaves through the market, causing Bitcoin's price to drop dramatically. Similarly, the U.S. Securities and Exchange Commission, SEC, began scrutinizing ICOs for potential securities violations and instilling fear among investors. Despite these challenges, Bitcoin's decentralized nature made it resilient against regulatory efforts. Supporters argued that the core value of Bitcoin lay in its ability to empower individuals and facilitate financial freedom. Many advocates also emphasized the importance of self-regulation within the cryptocurrency community, highlighting efforts to improve security and reduce fraud. The conversation surrounding Bitcoin regulation continued to evolve, with some countries embracing the cryptocurrency while others remained wary. In 2021, El Salvador made headlines by becoming the first country to adopt Bitcoin as legal tender, a move celebrated by many in the cryptocurrency community as a landmark moment. This decision sparked debates about the potential for Bitcoin to be integrated into national economies, while also raising concerns about volatility and financial stability. As Bitcoin continued to navigate regulatory waters, the conversation expanded to include environmental considerations. Critics highlighted the energy-intensive process of Bitcoin mining, leading to calls for more sustainable practices. The dialogue surrounding regulation, environmental impact, and the future of Bitcoin underscores the complexities of integrating this revolutionary technology into existing financial systems. Bitcoin's mainstream moment. The COVID-19 pandemic in 2020 acted as a catalyst for Bitcoin's mainstream acceptance, fundamentally altering perceptions of money and investment. As central banks around the world launched unprecedented stimulus measures to mitigate the economic impact of the pandemic, fears of inflation and currency devaluation took center stage. In this environment, Bitcoin emerged as a hedge against traditional fiat currencies, attracting attention from both individual investors and institutional players. In 2020, several high-profile companies made significant investments in Bitcoin, marking a turning point in its acceptance. Tesla, led by Elon Musk, disclosed $1.5 billion investment in Bitcoin, while Square, co-founded by Jack Dorsey, allocated a portion of its assets to the cryptocurrency. This newfound institutional interest not only legitimized Bitcoin as an asset class, but also highlighted its potential as a store of value akin to gold. The introduction of Bitcoin exchange-traded funds, ETFs, further fueled this momentum, allowing traditional investors to gain exposure to Bitcoin without directly holding the cryptocurrency. The anticipation surrounding Bitcoin's ETFs grew significant media attention, with many viewing their approval as a sign of Bitcoin's maturation. The first U.S. Bitcoin futures, ETF, launched in October 2021, signaling a new era of institutional participation and paving the way for further investment opportunities. Simultaneously, retail adoption surged as platforms like PayPal and Venmo enabled users to buy, sell, and hold Bitcoin seamlessly. This accessibility democratized Bitcoin ownership, allowing everyday individuals to participate in the cryptocurrency revolution. The growing integration of Bitcoin into traditional financial systems underscored its shift from a speculative asset to a viable means of value exchange. As Bitcoin's market capitalization surpassed $1 trillion, it solidified its position as a key player in the global financial landscape. The convergence of institutional investment, retail adoption, and growing mainstream acceptance marked a defining moment for Bitcoin, transforming it into a legitimate asset with the potential to reshape the future of money, the future of Bitcoin. The journey of Bitcoin from obscurity to global currency has been remarkable, encapsulating the spirit of innovation and disruption in the financial landscape. As a pioneering cryptocurrency, Bitcoin has challenged traditional norms, offering individuals a means of financial autonomy and empowerment. Its rise is not merely a story of technological advancement, but a broader narrative about trust, community, and the desire for a change. However, the future of Bitcoin remains uncertain and multifaceted. While its reputation as digital gold is firmly established, questions about its role as a currency persist. Will Bitcoin become a widely accepted medium of exchange, or will it remain primarily a store of value? As regulatory frameworks continue to evolve, Bitcoin's adaptability will be tested in various jurisdictions. Additionally, Bitcoin faces competition from a myriad of altcoins and central bank digital currencies, CBDCs, that aim to address its limitations. The cryptocurrency landscape is dynamic, and innovations in blockchain technology will likely lead to new solutions that could reshape the financial ecosystem. The environmental impact of Bitcoin mining remains a contentious issue, prompting calls for more sustainable practices within the community. The dialogue surrounding Bitcoin's energy consumption will play a crucial role in determining its acceptance among mainstream investors and regulators. Ultimately, the story of Bitcoin is still being written. As it continues to navigate challenges and seize opportunities, its legacy as a catalyst for financial innovation and a symbol of empowerment will undoubtedly endure. The world will be watching as Bitcoin forges its path in the ever-evolving landscape of finance, and its journey will serve as an inspiration for generations to come.